Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Hello and welcome back to the Ask Ralph Show. Today I thought I'd take a little time and talk about what happens if you find yourself in that position where you cannot afford to pay your taxes. Now, I'm not talking about, a one-time situation where you file one tax return and you find that you're short and you can't afford to make the payment. That is probably the best fit for what the IRS would call an installment plan. But what I'm going to talk about today is what's called an offer in compromise. Now, you may have seen advertisements on TV about settling your debt for pennies on the dollar. This is generally what they're talking about. But with everything, remember, there's always a catch. And I find in my practice, a lot of clients will come to me, who may have tax issues, or maybe, they've filed their taxes, but they haven't been able to pay for several years. And they talk to me about, Ralph, I saw this advertisement on the television, how I could, call this company and they would settle my tax debt for pennies on the dollar. Now, you get what you pay for. First thing I will tell you about that, and I want to spend a lot of time talking about those companies because I don't even want to give them the benefit of this, but you need to pay attention to what you're getting into and understand what you're paid for. So I thought today I'd take us some time and explain to you exactly what we're talking about. And what they're talking about is called an offer in compromise. And there is a publication on the IRS website called Offer in Compromise. And I'm going to be using that today as our guide for what we're talking about. Now, an offer in compromise allows you to settle your tax debt for less than the full amount you owe. Great. This is a legitimate option if you can't pay your full tax liability, or doing so creates financial hardship. Now, what do they mean by that? So here's what they're going to consider. It's a unique set of circumstances depending upon each individual person. They're going to consider your ability to pay. Obviously, they're going to consider your income. They're going to consider your expenses and asset equity. What is it that you own versus what you owe? The IRS will generally approve an offer in compromise when the amount offered represents the most we can expect to collect within a reasonable period of time. Exactly. Now, I have worked with clients many times on this. If you come to me and say, you know what, Ralph, I'm not good about paying my taxes, but I've got good income, I own assets, you're not going to qualify for one of these. So don't waste your time, and don't waste sending thousands of dollars to one of these, tax improvement warehouses that you see on TV. So the first thing you need to understand is make sure you're eligible. One of the main components to that is before the IRS will consider an offer, you must be current with all your filing and payment requirements. And you're not eligible if you're in an open bankruptcy case. So what are they saying here? You have to be current on all your filings. That doesn't mean you have to have paid all your filings. But I have had clients come to me who still hadn't filed their taxes for maybe the current year or the previous 2 years. You're not going to qualify for an offer in compromise until you're current with your filings. Now, how does the process work? I'm not going to spend a lot of time talking about the details, but you're going to submit your offer. And that is done on a Form 433A for individuals and or a 433B for businesses. Now, having done many of these, if you're going to do this yourself, be careful. You got to include all of the documentation that they note on the form. If you send something that is not, if you fail to include something that should have been included, they are going to reject your offer in compromise. You also have to complete a Form 656. That's the individual and business tax debt. You're going to have to pay your $186 application fee, which is non-refundable, and your initial payment, which is non-refundable for each one of these you file. Now, here's where we talk about payment option. This is what's changed a little bit in the last few years. You used to be able, you could send in, one of these offers in compromise and, pay the filing fee and hope that the IRS would accept it. And then once they accepted it, you had time to make your first payment. But now your initial payment is based on your offer, and you really have two options. You have a lump sum cash, which is submit an initial payment of 20% of the total offer amount with your application. So let's say, you owe $100,000 in taxes. Well, in order to do this lump sum cash, you'd have to send in at least 20% or $20,000 of that. Now, the remaining 80% would be due once the offer is accepted and needs to be paid in 5 or fewer payments. So basically, I think, most of the time we're seeing that paid over a 5-month period afterwards. Now, you also can ask for periodic payments. Submit your initial payment with your application. You continue to pay remaining balance in monthly installments while the IRS considers your offer. If it's accepted, you continue to pay monthly until it's paid in full. Now, all of this goes away if you meet the low income certification guidelines, which you can check on in the publication yourself. Now, once you've submitted your offer, you need to understand that this is a time to hurry up and wait. While your offer is being evaluated, and this is one of the reasons a lot of people do this, your non-refundable payments and fees will be applied to the tax liability. So as you make, let's say you go with those periodic payments, those things are going to be applied to your tax liability regardless of whether they accept your offer or not. They may still file a federal tax lien. They're not going to do any other collection activities though. So if you're worried about garnishments or liens or levies, they're not going to do that. The other thing you need to understand though is when you're in this offer and compromise, process, the legal and assessment collection period is extended. So it's just like it stops. So, there are certain time limits the IRS has to collect debts. Once you enter into the offer of an offer and compromise, it ceases that. You need to make all your required payments associated with your offer. You are not required to make payments on an existing installment agreement if you're in one of these offers. So if you have an installment plan and you file this offer and compromise, you can quit making those payments. Here's another thing that most people don't realize. Your offer is automatically accepted if the IRS does not make a determination within 2 years of the receipt date. Now, listen to what I just said. It's automatically accepted if they don't make a decision within 2 years. So that's why I said hurry up and wait. This is not a process that happens overnight. This is a process that can take, like it says, up to 2 years. That's assuming that you provide them with all of the information that they've asked for, all the documentation. Now, if your offer is accepted, you're going to have to meet all the offer terms. They're going to send those to you. That means you're going to have to file all tax returns and make all payments. Any refunds due within a calendar year in which your offer is accepted will be applied to your tax debt. So if you do a refund, they're going to apply that even though you had this offer and compromise. Federal tax liens are not released until your offer terms are satisfied, and certain other information is available for public review by requesting a copy of a public inspection file. Now, if your offer is rejected, you do have the right to appeal it. You can appeal that within 30 days using the request for appeal to offer and compromise or form 13711. Now, like I said, so if you're interested in doing one of these, I would highly recommend you talk to somebody like myself or a tax attorney. I wouldn't call one of the online sites or these television commercials you hear about all the time, because you're going to end up paying thousands of dollars only to find out that you probably aren't going to qualify for one of these. So do your homework, pay a consultation fee to somebody like myself that can sit down and go over what you have, look at your income and expenses and assets, and really make a determination of whether you're going to even qualify for an offer and compromise. So hope this was helpful when we talk about IRS offers and compromise.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.